how the candlesticks are being formed. So they just assume when they see green candle, they think at maybe a level they want to like is bullish. Once they see a red candle at a particular level, they say oh, it's bearish. But they don't really understand the concept behind that candlestick formation. So today we are going to really look at those things, the candlestick formation, how you can take advantage of it, how you can know when to actually get in or get out of a trade. Also, you are also going to learn some market structure. You talk about a little supply and demand, and I won't say we are not going to talk about divergence for today because it's a complex topic that you need to take time to uh, talk on it, discuss on it. So, but you are going to learn a lot today. So just prepare your mind, prepare your jotter. You're going to jot down things, and if you have any question, you can ask while the class is going, so that you won't be left out or you won't forget anything. So you're going to go straight away, and you're going to start. Don't forget, like when you check our channel, you see the analysis we do post. Uh, all of them are all in profit. Even I think this Euro CHF that was posted, it's in profit. So once you see a setup being posted, go back and check, do your work. Ask yourself, why are they buying at this particular level? Why are they selling at this particular level? That's how you're going to learn. But if you see a post and you just go back and sit back doing nothing, you may not really understand what is going on. So I urge you today, take note of every setup that is being dropped on that group. You will learn a lot. I'm telling you, learn a lot. So without wasting most of time, let's dive in. So I'm going to start with, like I said, I'm going to start with the candle formation. I hope you can hear me. Please, you can take a pen and paper and jot this down. It's very important. So first of all, when we talk about candlestick, the first thing that should come into your mind is the way the candlestick are being printed on chart. So how does it form, or how is it formed? You don't just want to like take a trade and then all of a sudden you don't know what is going on. You just, in fact, you'll be caught unaware of some things. So now basically for a normal candle, we have, let's take this as a candle. Let me change the color so that we can see the color very well. You can see the candle very well. Let me change the color. All right. Okay. So let's say this is our candlestick. So what we just want to know is, this is the candle. We don't know whether it's bullish or it's bearish. Don't mind the color. This is just a candlestick. So we don't know whether it's bullish or it's bearish. And you know that every candle has a wick, although it's not all, some don't. But candlestick do have, every candle have a wick. So we have a wick up, a wick up and a wick down. So you might be asking yourself, what is the anatomy of this candle? How is it formed? How would you know that this is a bullish or this is a bearish candle? Now, like I said, once you see a candlestick this way, the first thing that should come into your mind is, where did the candle open from? Now, if you look at this candle, you may not know if it is bullish or bearish. Although I've painted it red, so you might think it's bearish. So let's just say, okay, let's assume it's bearish because of the red color we just put in. So now, for a bearish candle, for you to know the opening price of a bearish candle hold on, let me adjust this. Okay, so for a bearish candle, a candle open here, do a low, go up, make a high, come back and close here. So now this is for a bullish candle. Then for a bearish candle, it opens at the top where you have the body stop, is where it opens. Now once it opens there, what happens? It goes up, print a high, come down, print a low, and now close. The body now close back here. That's for a bearish candle. Oh, hold on. Let me draw that well. The opening here, have the high, have the low, and we have the close. All right. So this is for a bearish candle. Every bearish candle you see on your chart opens at the top. Now, when they open at the top, what they will now do is they'll create a high. When they pull up, when they are going up, you see the body will be full. This body will be going up the same way to that point. Maybe to any way they want to turn, maybe to a key level or a support level they want to turn from. And once they reach that level, what happens? They start pulling back down. They start pulling back down. And okay, let me use this. When they open here, they move to the top. At the support level they want to, maybe a resistance level they want to sell from, or a key level they want to turn from. Once they reach that point, they will now start going back down. Now, as they are going back down, don't forget their opening price is still here. They are still maintaining that opening price. They don't change. Once the opening it opens there, the opening price still stands. So what now move is the one that will close. Is the closing price that will be the part that is moving. So once it gets to the point of let's say key level and it wants to turn, it will start going back down, cross the opening price. Once it crosses the opening price down, automatically the candle has become bearish. Now, once it crosses that opening price and it comes down to and it has expanded enough for it to close, and let's say this is a let's say 1 hour time frame, it then expands. So once the 1 hour time frame is over, what happens? It closed there. It now maybe pull down to a little bit though, then now pull back up and close at, let's say, that level. Now once it closes, it simply means that this candle is a bearish candle. Why? Because the opening price is above and the closing price is below. So this long wick is as a result of the pullback. They first of all came down, and what happened? They now pull back up. So that is why you are having this wick. It definitely means that the two buyers and sellers at this point are equal. The two buyers and sellers at this point are also equal, but from the way we have the volume, which is the body, to this point, there's no buying. Yes, so you only have what? A huge number of selling pressure here. So same thing happens to the buy. If this candle was supposed to be a bullish candle, it will open below. Once it opens below, in fact, once it start opening, you won't know whether it's going to be a bullish or a bearish candle. Once the candle opens, you may not know whether it's going to be bullish or it's going to be bearish. That's why it's always advisable to wait for a candle to close before you take any decision. So you don't just see a candle open and you start seeing the candle start going up. You are thinking, oh, it's bullying, and you jump in with a buy. Automatically, the candle can, after bullying to some certain level, maybe hit its key level, and what happened? It reverse, cross the opening price and start going down. Once you cross the opening price and start going down, it's a bearish candle. Now, once you cross the opening price and start going up and close above the opening price is a bullish candle. So the opening price here tells you whether the candle is going to close up or is going to close down. So if it close up, that's to say that candle is going to be bullish while it's closing above its opening price. But if it's closed down, that's to say the candle is bearish. So it's doing what? It's likely, yeah, it's a bearish candle. So that's how the candlestick is being formed. So now I don't know whether any of you have heard of the power of three. Power of three is the opening, the low, the high, and the close. This is what we call power of three. Power of three is when you have let me shift this. All right. Power of three is when you have a candle open here, this pull back down. For example, let's say this is a bullish candle. Let me run that to be a bullish candle. Let me change the color. Let's make it green. All right. So let's say, for example, this is a bullish candle, and let's say you were expecting this. Let's say this is a daily candle, and you're expecting the next day to be bullish, or you are expecting this particular day to be bullish. So what happened? This candlestick this week you will always see it's always used for manipulation. Now, if you open your chart, you always see this. If you go to, I think I'm going to show you that on chat. I've forgotten the name of that. I think it should be. I'll check that. I can't really. It's not a line chart. I'm going to check that. But if you go to the chart,
bar charts.
Yeah, the bar charts. I think. Let me see if I can get it here. I can't get it here. I'll check it. Maybe I'll drop the chart and the particular chart for you guys to see. Now, this is what you see. And when the candle opens here, you expect a manipulation. Don't forget, this market is full of manipulation. Most of the times, the place you want to buy from is where price wants to take people out first. Take out, let's say you have a support that you should support. Let me take for instance, you have a low here, a support here that you want to buy from, and price came in. When price came in, price now stood somewhere like this. You know that definitely you want to buy from here once price get to this level. Now when this candle now open, what did the candle do? The candle now did something like this. Open here. Instead of the price to bounce here and give you maybe an engulfing candle, your candlestick confirmation to buy, what happened? It now deep. Tap in well. All the people that bought here dropped their stop loss below, were now taken out. Don't forget, a lot of people will be buying because they know that this is a support level. So all of us, we want to buy here. So now we know that, okay, fine. Support, we always buy at support, then sell on resistance. So this support level, we want to buy here. So most people will put their buy limit here and place their stop loss just below the support level so that if price should trigger them, it will go in their direction. Some you put, I think, a buy stop. If it tap in and let's say move up, it will trigger them up and start going. Then some can even decide, seeing this as a support level, they can say, okay, price is going to break out. If price break out, you should trigger them and continue down. Then they'll put their sell stop below here because they'll be thinking, okay, this is a support zone. If price fail this zone, it should just trigger me and continue going down. They'll now put their sell stop below. So now what will price do? Price now, knowing that a lot of people, there is a lot of order on this level, a lot, heavy orders on this level. They will now do what? They will seek to manipulate this level before they will go in their desired direction. So what will they do? That is what we call liquidity. So they'll seek to liquidate everyone that has placed their position, whether sells or buy at this level. So once they manipulate the level, what happens? They will now expand. So that is what we call, I think ICT call it the power of three: open, low, high and close. The candle formation, open, low, high and close. So this is your accumulation of order, manipulation of order, and then distribution of order. So they will open, accumulate orders, they manipulate, take out all the people that wanted to sell and people that wanted to buy without waiting for confirmation, or without knowing if they will buy or not. They just put limit order, place their stop loss. It will trigger them, hit their stop loss, and still go in that their direction. Were they wrong? No, they were correct, but they lack the understanding of liquidity. So once price liquidates them, what will happen? Price will now move in that direction, and what happened? They'll be, let's say, they'll get angry with themselves and they'll start thinking the market maker are watching them. Meanwhile, it's just some simple basics that you need to understand before you take your trade. You don't want to be caught up on all this manipulation. So that is how the candle is formed. So once you see a candle open, a daily candle, let's use a daily for example, you're expecting a buy. Expect that daily candle to be a manipulation before the expansion. So this is your accumulation. They have accumulated the order, manipulate them by taking out their stop loss, then distribute. Now the distribution is the expansion that will go in your direction. Then what happened? They'll now come back and close. This is exactly what you see on your chart. So if I go to, all right, let's use this Euro CHF as an example. No, that chart is too rough. Let me look at GU. I want a price that is very clear. All right. Okay. Let's look at this. Let's look at this particular. Okay, no. I need. Let me look for a very clean price. Okay. Let's look at this. All right. Let's work with this GBP CHF. Now, this is a candle that is forming today. This is the daily time frame. This I'm going to give you like a kind of a cheat code to always look out for on chart. If you see, each time you see bullish candle, strong bullish candle moving up, closing, you already know that this is a bullish candle. Why? Because looking at the low and looking at the high day, the body, the volume is to the upside, and as you can see, it closed to the up because it's green. It's green, and it's green. It's a bullish candle, so it's green. It closes at the top, so definitely you know that this one is a bullish candle. This one is a bearish candle. Now, like I said, most of them have wick due to the volume involved or due to the way they close. So now let's look at what I just explained on this particular candle that is running. Now this is the low of that candle here. Now this is the opening of that candle. Don't forget, the opening of a new candle is always the close of the previous candle. So if like this is the opening of this candle, and this opening of this candle was the close of this previous candle. This is the opening of this candle. This opening was the close of this previous candle. Then this is the opening of this candle, this bullish candle, and this was the close of this bearish candle. So this bearish candle actually opened here, but I think due to the broker error, this candle was not supposed to be here. It was supposed to be around this level where this one closed. Was supposed to be where this one should open. Then we now have the closure to the downside. So all right, so now let's look at this particular candle that is ongoing. Now if you want to, and you saw that all these candles are bullish candles, and you know that okay, today might likely continue bullish because of, let's say, previous day was bullish, close, very strong bullish momentum with full body, and you anticipate a continuation on the next day. So what do? Just take note of the opening price. You go down to, let's say this is This is the, let's use the 30-minute time frame as an example. Let me put my period separator so that we can know today. All right. And this is today. This is today. So this is the opening price, and this is the low of the candle of that candle. So what do you see? Now price open here. Price open here. What happened? Went back down before now started doing what? Expanding. So now this is your open. This is the low they have created, and they are going back for high. So once they get to the high, what happened? They will now pull back a little bit, maybe close in the middle, and they are done for that day. Then they wait for the next day. All right. So let's look at another example, which is this one. Let's go back to the daily time frame. All right. You can see this particular candle. This is the opening price. This is the opening price. This is the wick, the low, and this is the high. Let me take out this one and this one so that I will not get confused. So now let's go down to 30 minutes. Now you can see sometimes a lot of people will say, okay, this is a resistance that was broken. Is it not? It is. Now a lot of people will do what? They'll say, okay, a resistance has been broken. So what should price do? Price should bounce to and do what? Buy. So once the resistance is broken, you should turn to what? A support. And what do? You want to buy. So a lot of people will start putting 5 minutes here. And what would they do? They keep their stop loss below the resistance level, just below it. Now, some you say, okay, this might just be a fake out. They just ran out. Once they come back and close below this low, or once they come back, I'm going to put a sell stop below, so that in case they want to go down, they should just trigger me and continue going down. So some people do what? They'll put sell stop here, thinking that, okay, the market is selling. Once it gets to this point, once it, let's say, close below this resistance level, what happened? They should trigger them and do what? Start going down. So they now put their sell stop there and put their stop loss maybe just above here. And what the price do? When price came, the almighty resistance that everybody were looking at, what the price do? Price weak. When price weak, everyone that plays their buy limit here and put their stop loss below, they have been triggered and they have been taken out. Then everyone that said, okay, he's selling, let it continue selling. Thank God he's selling. Let's put sell stop so that once it triggers our sell stop, it should continue going down. What happened? Their sell stop has been triggered, and what happened? Price has hit their stop loss as it's pulling back up. So what happened? Everybody will suffer pains in this place. Why? Because they don't really understand the concept of liquidity, how the market moves. So at this point in time, you don't want to be caught in this kind of market. So what will you do? Like I said, follow the way your daily candle open. So now, as you see here, this was where our candle opened. This was where the daily candle opened. What the price do? Price pull up. You're expecting a buy move, not a sell. So once you see price go up, it's manipulation. They are trying to trick you. You want to do what? You want to allow it to come below the opening price, because as they are going below the opening price, this is what you are going to see. Let's do this. This is the opening price. This is that's the week for the opening price. So now, once they open, they are already here. They open here, and what happened? They move up. This is what you'll be seeing. Okay, let's say at that point in time, this week is not there. You won't see this week. Maybe you might see the week very small like this. So let's say it's somewhere there. Then they move up. When they move up, what happened? They get to this point. This is the point they got to. So they got to that point there. What happened? A lot of people seeing this candle like this on the daily time frame bullish say, whoa, my God, we are already buying. Let's do what? Let's buy. And they'll do what? Seeing bullish momentum here, and yesterday was bullish. They have started buying self. They say, okay, it has break the resistance, so you have started buying. And like I said, they place their stop loss here. And what happened? Price will now say, okay, fine, I've trapped them enough. Let's do what? Let's liquidate them. And what happened? Price will now start coming back down. They now say, okay, it's retracement. It's going to continue. Fine. But where did you keep your stop loss? Below. Some keep below this low. This is a swing low. Swing low. Most will place a lot there. What happened? Price now did what? Hit them out. Get to this level. Now, when price get to this level, what happened? They're weak. That's when you have sales. That is when you have these sales because of the sales they did. That's when you have this bearish candle that you have here. So now when they got to this point, taking out the liquidity, what happened? They started going back up. No, so the process of them going back up on the daily time frame, they'll start creating wick. That's to say they're also buying. That's to say the sellers and the buyer at that point, they are complete. So there's not just a buying move or just a selling move. So both buyers and seller are present at that particular level. So definitely means that you won't see anybody body candle there, but you see wick. That's why you see rejection. So sellers and buyers are complete there. So what happened? They now push up. After they push up, they did what? They get to this level and they came back and closed here. And that is why you have the small wick that we have here to this point. Now take a look at this candle that I just drew here. Then let me go to the daily time frame and let's check whether is there any difference in the two candles. All right, this is the candle. Have you seen it? This is the candle. The open, pull down. Just take note of this candle, how it is. See the high here, see the low here, see the opening price. Now let's go back to the 30 minute. Let's look at the candle that I showed, whether it's the same. All right, can you see? Is it the same? It's exactly the same thing. So that is how the candle is formed. You don't always want to be a buyer above their opening price. Instead, I'll advise be a buyer below their opening price, where you have a lot of, let's say, buyers, or let's say a failed resistance level. Then you wait for a confirmation at that level before you buy. Don't just be a buyer because everyone is buying. Have a reason for your buys. Always buy below the opening price. So now, for example, if I was to take this buy trade, what will I do? I won't buy on this resistance because I know a lot of people are buying here and their stop loss will be placed here. So what I will do is I will carry my trend line. I know that this low will be taken out. What will I do? I'll just mark them out. Now, like I said, rejection is part of a confirmation that price is going to go in that direction. So now, on this 30 minutes, I can see price rejected the first time, had a second rejection, third, a lot. And what will I do? I just need a momentum candle to confirm. And what happened? We had this final strong momentum candle, bullish, that closed. Immediately this candle closed. What I'll do is I'll just drop just one time frame to 15 minutes. Drop down to the 15 minutes. I'm just looking for, oh, you guys have not been taught other block, so I think I'm going to touch that. I'm just looking for an order block, a down close candle for it, and this is it. And that's how I will buy. I'll buy, my buy limit will now be on top of this candle, this red candle here, that bearish candle, I'll put my buy limit on the high of that candle, and my stop loss will be below, just be below. Now I'm buying below the opening price, which is here. So where will be my TP? Just like a 1:2 or 1:2 point something. And this is already 1:2. And my TP is hit. So all this manipulation that I would have been caught in, I would have escaped it. Why? Because I had to wait for them to do what? Sweep the liquidity, take out those early buyers, and for them to go below the opening price before I do what? I take a buy. So that is how a candle is being formed, and that is how you can take advantage of just knowing how a candle forms to trade. There are some people that usually just trade the daily candle. Once the candle open, what will they do? They will just identify the opening price, the high, and the low of previous candle. Then they identify the opening price of that particular day. Then they wait for it to go down, and they'll buy low, and they do what? They'll sell high, and they exit their trade. So now this is the accumulation, manipulation of order, and what happened? Distribution. So they have accumulated orders here, a lot of accumulated orders, a lot of buyers here. They have a lot of buyers here. They also have a lot of sellers here. So what happened? They accumulated more of them and did what? They manipulate. When you talk of manipulation, what does it mean? They have taken out people, they have deceived people in their direction. After they manipulate them, some take them out. Then what happened? They now distribute. They expand. So with that, you will now know, okay, fine. So when I see any support, what will I do? I should wait. I should not take any buy on any support level anyhow. Now let me show you another example. Let's do it on this particular day before now go into another thing. Now let's go. Before I go to the daily time frame of this particular day, let me break it down on the charts first, so that you compare what I'm going to show you with what you're going to get, with what you're going to see on the daily time frame, whether it's the same thing. All right. So now, this is the opening price of this particular day. That's the opening price. And what happened? This is a support level. A lot of people want to buy here. So what happened? Don't forget what I said. They will buy. Some people will buy limit. Who buy limit there? Say the support, it will hold. And some that want tight stop loss just place their stop loss below. Keep it there. That's how they'll do it. Some will even keep the buy. They'll say, I don't want price to miss me. Let me keep it here. And just keep my stop loss below. Once price trigger me, it will get my direction. So some will say, okay, the trend is already bearish here. It's bearish. So I know that once it's pulled back up, this is a pullback. So he's coming down, he's going to break this low and continue. Seeing the strong momentum, they'll say, okay, fine. We put sell stop below. The same thing. And what happened? You're looking at this price, you know that, okay, this is the opening price. This low is just resting below the opening price. And what happened? You know, okay, we have a trade today. Let's say this is high. Just mark that out. So what will you do? You wait for them to go below the opening price. Now when they went below this opening price, that is how you see the candle on the daily be going. Now a lot of people are still asking themselves or looking at the daily candle, how it's going to form. Is it going to close bullish or is it going to close bearish? So once they start seeing the candle buying, they're already inside. They already started buying with it. So a lot of people are already buying here, putting their stop loss below here too. Some will even buy as it's going, as in fact when it gets here, some will still buying, then put their stop loss here. So what happened? Price bought to that level. What happened? Price pull back down. Now this pullback is what you see here. As it pull back, as it's manipulating, this is the manipulation leg. Now the manipulation leg came in, took out all the people that placed their stop loss below this low here. So now that is when you now have this wick. That is when you have wick to this point. Then what the price now do? Price started buying back up. Now at this point, when this price crossed this opening price to this point, a lot of people are thinking it's going to sell. Why? Because the candle now is be red. In fact, the color will change to red. Because I'm using red and green. So since it's a bearish candle, the color will change to red. So a lot of people saying, oh my God, it's going to sell, it's going to sell. Meanwhile, this candle has not closed. It's still in action. And you're already freaking out that it's going to sell. And you're already stacking sales position. Meanwhile, it hasn't closed yet. So what happened? Price will now treat them. Just seeing the candle color and behavior, they say, okay, let's pump in sales because it's going to continue. And what happened? After price has finished taking out the low, start going back up. And immediately cross the opening price, start to show green, start being bullish. And what happened? Price now went and closed here. This is where we have the closure of this price. I think at that point. So now, look at how this candle closed. This is what we have here, this particular day here. So look at how this candle is the volume of the body. Let's go and compare it to the daily time frame and see how, whether it's exactly what we have there. Don't forget the picture, just keep the picture in your mind. All right. Have you seen it? This is the candle. This is the candle. Have you seen? Sell close very bullish. See the wick, small. That's exactly what happened. That's how you know how a candle is formed, how it's closed, and how it opens. So that's how it is on the daily time frame. But on the 30 minutes, you'll be seeing a lot of up and down move. This is it. This is that particular day. So if you just count, this is today, 1, 2, 3, 3 days backward. Let's go to the daily time frame. This is 1, 2, 3, which is this one. So that's the candle. You see the body the volume is huge, but the wick is small. Same thing there on the 30-minute candle that I drew. The body is huge, but the wick is small. So that is how the candle is formed. So if you understand this simple concept, it will help you a lot. You won't be making unnecessary mistakes, and it will help you navigate or know how the candle behaves. So you won't be freaking out once you see a candle moving in a particular direction or it has not even closed. You're already trying to take decision. So I advise always wait for a candle to close before you do what? You take a trade. And also, if you're anticipating a bullish move or a bearish move, wait for it to go below the opening price or to go above the opening price before you get confirmation for a sell or a buy, depending on the market condition or what you see and you want to do. So I think I've explained that to be very clear to everyone. So you're going to move on. Do you have any question? Do anyone have any question about the candlestick formation? Okay. Let's move on. Let's talk about supply and demand. We're going to talk about supply and demand. Now, on supply and demand, we're going to look at why is it called supply and why is it called demand. If you look at this chart, let me go to the 1 hour time frame. If you look at this chart, you'll be seeing a lot of things that you might even be confused. You will not even know where to buy and where to sell from. Look at, there's nothing. Even myself, looking at the chart, I'm even scared. I don't know where to buy and where to sell from. But if you understand the concept of supply and demand, you will know where to buy and where to sell from. So now let's look at Okay, let's start with the pictorial or a picture of it first before we now go to the chart to identify. Now there's what we call rally base. Is it let me mark that. You see, before price will drop, you see something like this. Then maybe expand, then pull back and continue. So this particular range that it was moving sideways, it's known as your supply. Once price break out, so price will pull back to do what? To mitigate it and continue. Same thing for your demand. If price broke out to the upside, then what do you anticipate? You want to anticipate that price is going to do what? Come back and retest it, then continue. So this particular point will be your demand zone. So sometimes you might see price do something like this. Price do something like this. I'm sure most of you be familiar with this kind of pattern. This is what we call smart money reversal, but this is price accumulating order, like I said, on the daily time frame when the candle is being formed, moving sideways. So this is the accumulation of order, this is the manipulation, and this is the distribution. So this particular demand zone that price broke out of to the upside, when it broke out to the upside, automatically everybody will be expecting that is a demand, so price should come back, retest and buy. But what happened? It fails. So automatically this point here is now a strong point that price should pull backward and still respect, because the demand now has failed. So what should it turn to? Should become a supply. So you anticipate that price should pull back where? To it. Price should pull back there and do what? And sell off. This particular let me call it pattern, some call it Quasimodo, is high probability. If you can spot it on your chart and you know how to navigate around it, you're going to make good funds from it, because every manipulation or price like manipulation, that's how it's been programmed. So if you can spot the manipulation leg, then definitely you are always going to win your trade. There's no manipulation, it's just normal supply or normal demand being broken and price come back, retest and continue. But there's a manipulation leg. So if you always have a manipulation leg, expect price to go in the opposite direction that it has manipulated. So you don't want to be caught in between, because there are sometimes you see this and price take out, you're already buying, buy limit below, then SL below. What the price came back, hit you out. You'll be like, oh, what's going on? Okay, it's going to buy. It has taken out the low, it's going to buy. You now do what? When it came to this point, you now buy here. Then I don't know where you keep your stop loss, because I've seen someone, I have a friend of mine who did this. So you now buy here. I don't know where we keep his stop loss, but let's assume your stop loss is here. But this is a manipulation. So if you are smart enough to know, to see this on your chart and you identify it and you just wait for price to pull back to it, then you sell. Then you're likely going to be profitable with this system. I'm not saying this is not going to make you money. It's making money, but most of the times you will always see a manipulation. You will always see manipulation. It's profitable if you trade with it. So if we should go to the chart now, let me show you some of it. Now let's look at this. Let me start from here. Now this is, let's say, this is a supply zone here that we have. Let me mark it out. Why is it a supply zone? Price was moving sideways and expand out of it. So what happened? That's our supply zone. So you want to wait for price to come back. The price came back. Like I said, when price came back, what happened? Price tapped in, and what happened? You created another supply. You're moving sideways here. You're moving sideways here. What happened? So then you mark here, sideways here. Then what people are going to sell and keep us above. See, you be like, okay, price has gone.